Welcome, everyone, to the Let's Grow Movement podcast, and welcome especially to you, the learner. Today, we're doing a special deep dive.
That's right. We're jumping into the real estate market in Madera, California. We'll look at the first quarter of 2025 and then peek ahead at the rest of the year.
And we've got a stack of material here: reports, analyses, Redfin, Zillow, CRR, Rocket Homes, the Business Journal, LoopNet. Quite a collection.
Yep, a lot of data. Our goal today is to really boil it all down for you, extract the key insights, give you a clear picture of Madera's residential and commercial real estate scene.
Think of this as your shortcut. We'll sift through it, find the interesting trends, the key takeaways, so you don't have to wade through all the raw numbers yourself.
Exactly. Let's get started. How about we kick off with the residential market?
Sounds good. So, residential side, early 2025. What's the big picture?
Okay, so Q1 2025. Madera's residential market was pretty lively. Sales were moving briskly.
And prices, what were they looking like?
Average sale price was hovering, in the low $400,000. And interestingly, homes weren't sitting on the market for too long either. Relatively low days on market.
Right, and I noticed something about inventory. Seemed like there were more homes available compared to the year before. Was that significant?
Absolutely. That's a key point. End of Q1 2025, we were seeing around 230 active listings.
Okay.
That's up 11.5% from Q1 2024. So for you thinking about buying, that means more choice than a year ago.
More options. And were people listing their homes?
Yeah, we saw a typical spring increase. March had about 79 new listings hit the market. Pretty standard seasonal bump.
So, more homes listed, more choices. But was there demand to meet that?
It seems so. If you look at March 2025, combined pending and closed sales hit 57. That was a 16% jump just from February.
16%. Wow, okay, so demand was definitely picking up steam then.
Yeah, suggests strengthening demand moving into spring.
Now, February's closed sales. They're actually down a bit compared to the previous February.
They were. February saw 31 closed sales,
Yeah.
down about 11% year over year. But there are a couple of likely reasons.
Okay.
Fewer business days in February, for one. And apparently there was some disruptive weather in parts of California that might have played a role.
Oh, okay. Makes sense.
But that strong rebound in March, with pending and closed sales jumping up, really points towards the market gaining momentum again.
Gotcha. So, with more inventory, how did that affect the overall market balance, still favoring sellers?
Good question. We look at the month supply for that. Around 6 months is considered balanced.
Right.
In February 2025, it was 5.7 months. Now compare that to February 2024, when it was just 3.9 months.
So moving closer to balance.
Exactly.
Yeah.
Definitely moving towards a more balanced market.
Yeah.
But, with demand still pretty solid, it probably still leans slightly towards sellers. In the 90 days leading up to that point, roughly 100 homes sold, and there were more under contract. So things are moving. But that higher month supply, it might mean a little more breathing room for you as a buyer, maybe a bit more negotiation power than last year.
Okay, that's helpful context. So homes are available, demand is there. How fast are they actually selling once listed?
Pretty quickly, still. The median days on market, so the time before a home goes under contract, was hovering around 17 to 23 days.
17 to 23 days, that's still quite fast.
It is.
Yeah.
And it's been pretty consistent year over year, actually.
Yeah.
In March 2025, get this, 61% of the homes that sold were on the market for less than 30 days.
Over 60% in under a month. Wow.
Yeah, and only about 12% of listings in March took more than 90 days to sell. So the vast majority are finding buyers relatively fast.
Even the average time seemed to improve.
It did. The average days on market dropped to 36 days in March 2025. That was down from 44 days the year before. Suggests even some of the listings that had been sitting a bit longer started moving.
Are certain types of homes selling faster than others, like single-family versus condos?
Generally, yes. Single-family homes, which are the bulk of Madera's market, tend to move the fastest, often 2 to 3 weeks.
Okay.
Condos and townhomes, there just aren't that many available, maybe 3 or 4 listings typically. So their days on market can be a bit more variable.
And multifamily, like duplexes.
Those could be quick if they're like affordable fixer-uppers.
Yeah.
But if they're higher-priced investment properties, they might take a bit longer to find the right match. But the main takeaway, well-priced homes across the board are generally gone in under a month.
Okay, good pulse check on the speed. Now, the big one, prices. What's the story there? Low $400, you said.
Yeah, the median sale price for all home types is landing somewhere in the low $400,000. There are slight differences depending on who you ask and which month you look at.
Right, different sources, different numbers sometimes.
Exactly. Like Zillow had it around $411,000 in late February. Redfin's number for February was lower, about $380,000, which was actually down a bit year over year.
Okay, a decrease there.
But then the California Association of Realtors, looking just at single-family homes in Madera County for February, had it at $425,000. That was up slightly year over year.
Up slightly.
And another analysis from March put the median sold price around $435,000, also up a tiny bit year over year.
So, kind of mixed signals, but mostly pointing towards stability, maybe a slight upward nudge.
That's the key insight, I think. Overall prices seem roughly flat to maybe slightly up compared to last year. We're not seeing big swings either way. It feels pretty stable.
Interesting that the listing prices were higher, though, around $500K.
Yeah, median listing prices were higher, closer to $500,000 at the end of March. That gap could mean more higher-end homes or maybe new construction hitting the market, while the actual sales are happening more frequently at that slightly lower, low $400K price point.
That makes sense. Are different price brackets behaving differently, like entry-level versus high-end?
Oh, definitely. Entry-level homes, let's say under $300,000, they're becoming really scarce.
Hard to find.
Vary. They make up maybe 5–10% of listings. As of April, there were only like 3 or 4 active single-family homes in the city under $300. If one comes up and it's in decent shades, it's super competitive.
Which fits the affordability story statewide, doesn't it?
Absolutely. Now, the affordable to mid-range, say $300,000 to $500,000, that seems to be the sweet spot.
That's where most of the action is.
Seems like it. Maybe half to two-thirds of sales fall in this range. We actually saw prices for 3-bedroom homes tick up about 3.8% year over year to around $450K median. And 4 beds went up even more, about 7.5%, hitting around $500K median.
Okay, so some appreciation there. Competitive.
Moderate competition, I'd say. A well-priced, move-in ready home in that range can definitely still get multiple offers.
Right, and then moving up, $500K to $750K.
It's a smaller slice of the pie, maybe 20–30% of the sales. Prices there seem fairly stable, maybe appreciating slightly. 5-bedroom homes, often in this range, showed about a 10% year-over-year price bump.
And the really high end, over $750K.
Very limited market in Madera. Under 10% of transactions. They tend to sit longer, and prices have been relatively flat. So one example, a 4-bed listed at $1.16 million. Takes a specific buyer.
So definitely a market with different speeds depending on the price. How close are homes selling to the asking price? Are bidding wars common?
On average, sellers are getting very close to list price. The sale-to-list ratio is around 99.8%.
Almost full price.
Almost. But interestingly, fewer homes are selling above asking compared to last year. In February, about a third sold over list.
Only a third, okay.
Yeah, and nearly half, 47%, actually sold under the list price. The rest sold right at asking.
So buyers maybe have a little more wiggle room than they did a year or two ago?
Seems like it. It suggests less intense bidding overall, though, a perfectly priced home will still likely get its asking price or very close. We are seeing slightly more price reductions too, about 26% of listings at a price cut, up 2% from last year, mostly on homes that might have been priced a bit too high initially, or maybe some of those higher-end properties.
Okay, not the frenzy of the recent past for most homes. Let's talk about the buyers. Who is actually buying in Madera right now?
It's a mix. You've got local residents moving within the area, but also a fair number of people moving in from pricier parts of California.
Where are they coming from mostly?
Top origin seems to be the San Francisco Bay Area, followed by Los Angeles. Makes sense, given Madera's relative affordability.
And first-time buyers? Are they a big part of the market?
A significant portion, yes. Likely a higher share than the national average, precisely because it's more affordable. We're seeing folks in their late 20s, 30s, couples, young families. They're often targeting that $300K to $400 range.
So for you, if you're a first-time buyer, Madera is potentially a more realistic option.
Definitely more attainable than many places in California, especially when the statewide median home price is, around $800,000?
Yeah, crazy high.
And statewide, only about 24% of renters can even afford median-priced home. So Madera stands out.
What about the income needed? You mentioned the median income earlier.
All right, median household income in the city is about $63K, countywide around $75K. To comfortably afford a, say, $400,000 home with current rates, you'd likely need an income closer to $80K plus.
Okay. Any other buyer groups?
Yeah, you also have move-up buyers, maybe in their 40s or 50s, looking for larger homes, often in that $500K plus range.
And investors, still active.
Activity has cooled off a bit compared to the peak, but they're still around. Mostly smaller scale folks looking at rental properties. Average rent is around $2,266 apparently.
Hmm.
For investors coming from, say, the coast, Madera's potential rental yields or cap rates can look attractive. But owner-occupants are definitely the majority of buyers.
Interesting dynamic. You also mentioned locals looking outside Madera.
Yeah, that was a Redfin stat for Jan-Mart 2025. About 56% of locals searching on their platform were looking at homes outside the Madera area. So people moving in, people moving out.
And retirees.
Also seeing some retirees moving to Madera from other parts of California, likely seeking that lower cost of living.
Okay, that gives us a really solid feel for the residential side. Let's switch gears now. What about commercial real estate in Madera, Q1 2025?
Okay, commercial. The big story there was tight supply. Very tight.
Similar to residential, but maybe even more so.
Seems that way. Vacancy rates were incredibly low, especially for retail and industrial space. We're talking 1 to 3%.
1 to 3%. Wow, that's practically full.
Pretty much. And because supply was so tight, transaction volume was limited. Not many properties were changing hands, but the ones that were held firm on price.
And there's some new development expected?
Yes, that's the hope. New projects are in the pipeline that should eventually add more inventory to the market.
So how few listings are we talking about?
LoopNet data showed maybe 25 to 30 active commercial for sale listings in the whole Madera area, and maybe 40 to 50 commercial spaces available for lease.
Really not a lot.
No. So sales volume was modest, mainly because there just wasn't much to sell. We saw a new Smart and Final open late last year, which shows new retail space gets absorbed quickly. There were a few sales of smaller commercial buildings early in 2025, but turnover is generally very low. Probably continued around that 1–3% of parcels changing hands like in 2023.
So if something good does come up.
It attracts offers quickly. Demand is there, especially for industrial land and buildings along Highway 99. That corridor is hot.
Some higher interest rates impacting things here too.
Definitely. Financing is more expensive, so that has slowed down some deals, made buyers a bit more cautious, especially those relying heavily on loans. But the main bottleneck is still just the lack of stuff for sale.
Right, scarcity driving the market. Let's dig into those vacancy rates and rents. 1–3% for retail and industrial is super low.
It is. Near zero vacancy in some industrial areas. Retail storefronts aren't sitting empty either.
And that pushes rents up.
Generally, yes. Rents are firm or even rising, particularly for retail in good spots and definitely for industrial space. Lots of demand for warehousing and distribution in the Central Valley.
And commercial property prices, holding strong despite higher cap rates?
Yeah, prices have stayed stable at pretty high levels, again, because of that scarcity. You'd think higher interest rates pushing cap rates up would soften prices, but the lack of inventory is providing strong support. Owners know what they have is in demand.
Any exceptions? Maybe office space?
Office is a much smaller market in Madera. Mostly medical, some government. Vacancy there might be slightly higher, but it's not like there's a glut of empty office buildings. So minimal price softening overall, maybe a tiny bit in office, but that's it.
So a definite seller's market commercially too. You mentioned new developments coming. Can you give us some specifics? What's in the pipeline?
Yeah, there are several key projects, those big master plan communities, Tesoro Viejo and Riverstone. They include new commercial centers. Some of that is starting to come online now or planned for 2024 releases.
Okay, new retail and maybe office.
Likely, yes. Also, near Highway 99 and Avenue 17, there are plans for new commercial areas, maybe a business park, highway services.
And that huge Gunnar Ranch West project.
That's a longer-term play. Huge potential. Over 2 million square feet of regional commercial planned, plus medical office space. But infrastructure work is probably still a year or two out, so the impact is further down the road.
Anything else significant?
The North Fork Casino Resort, out in eastern Madera County, is slated to open maybe by 2025. That'll create hospitality demand and related commercial opportunities.
Right, casinos always bring ancillary businesses.
And importantly, Madera Community Hospital reopened in January 2025. That's huge. It revitalizes a major facility and is expected to boost demand for nearby medical office space quite a bit.
Okay, so quite a bit of new supply potentially coming over the next few years. What's driving all this commercial demand?
It's a few things. Population growth is a big one. More people means more need for shops, services.
Makes sense.
Business growth, too, especially in Madera's key industries. Agriculture, logistics, healthcare. Ag needs industrial land and processing facilities. Logistics loves Madera's location in the Central Valley.
Highway 99 access.
Exactly. And retail just follows the rooftops into those new housing developments.
So who are the typical buyers and investors in Madera's commercial scene? Is it different from residential?
Yeah, definitely a different profile. You have local business owners, often folks in their 40s or older, maybe with long roots in the community, buying buildings for their own use, a store, restaurant, farm equipment business, medical practice, that kind of thing.
Okay, owner users.
Then you get regional investors and developers, maybe from Fresno, maybe down south or the Bay Area. They're looking for opportunities, attracted by potentially lower prices than the big metros, and Madera's growth story, the highway traffic, new homes.
What are they targeting?
Often multi-tenant retail strips, maybe properties with NNN leases for stable income, or just raw land for future development. Developers from outside the immediate area are definitely eyeing Madera County, partly because of the casino and those big new communities.
Any other players? Big companies?
Sure, agribusiness firms, industrial companies buying land or warehouses for processing, storage, logistics, driven by their own expansion needs.
What about institutional money? Like REITs?
Less common in a market Madera's size. But you might see them get interested if a really large new apartment complex or a major retail center gets built.
And what's the general feeling among these commercial investors? Optimistic? Cautious?
I'd say cautiously optimistic. The super tight inventory forces a long-term view. High interest rates definitely make investors using a lot of debt think twice.
Right.
But cash-rich local families or established firms, they seem to be proceeding with deals and development. They believe in the local growth story. It's less about flipping and more about long-term investment or business expansion, unlike many residential buyers just looking for a home.
Okay, so let's pull back and look at the bigger picture. Comparing residential and commercial, supply seems tight in both, but maybe starting to ease slightly on the residential side.
That's a fair summary. Residential inventory is up year over year, giving buyers a bit more breathing room, even though it's still constrained by that mortgage rate lock-in effect. New home construction helps, but it's phased.
Whereas commercial has been tighter for longer.
Yeah, commercial supply has been pretty stagnant for years, but these new developments we talked about should start adding inventory gradually. It's needed.
And demand. Still strong across the board.
Seems like it. Residential demand got a little boost from mortgage rates easing off their peaks, and maybe recession fears fading a bit. Madera benefits from its affordability attracting people. Demand seems strongest for mid-priced turnkey homes. Investor demand cooled, but owner-occupants are active.
And commercial demand
Remains high. Retail, industrial, medical office, all seeing strong interest.
Let's revisit home price trajectory. After those huge run-ups in 2020, 2022, things flattened out. Where are we now?
Yeah, appreciation basically stalled out in 2022, 2023. Early 2025, like we said, prices are roughly level with last year, maybe up just a tiny bit, plus or minus a few percent. Most see that as a healthy stabilization.
Not a crash, just a pause.
Exactly. The Central Valley overall saw about a 3.5% annual increase in February, so Madera's maybe 1-2% fits right in. Entry-level probably appreciated most percentage-wise historically. High-end is flatter. Gentle appreciation seems to be the current mode.
And sales volume picking up.
It was depressed in 2023, showing signs of a rebound in 2025. Statewide, February sales were the highest in 2 years. Madera's February was down year over year, like we noted, but the trend into March and April looks like increasing activity. Expect total 2025 sales to be higher than 2024.
Mortgage rates settling in the mid 6% range helped there.
Seem to have improved buyer power just enough to make a difference. Plus, things like down payment assistance programs or seller-paid rate buy-downs are helping some buyers get deals done.
Well, on the commercial side, those higher loan costs, maybe 7% plus, are making investors a bit more selective.
Right. More scrutiny on the numbers for leveraged commercial deals.
And the local Madera economy, how's that feeding into things?
Seems to be on an upswing. Job growth in construction, healthcare, services. Unemployment is higher than the U.S. average, but that's typical with seasonal ag work.
Right.
Moderate income growth, kind of keeping pace with inflation lately. Consumer inflation overall is cooling. High rents, like we mentioned, make saving hard, but also make buying look more attractive if you can qualify.
And for commercial, it's tied to ag, logistics.
Yeah. Agricultural commodity prices, logistics trends are key. Stable crop yields, solid demand for warehouse space, improving retail. Those all support the commercial market.
Okay, that sets the stage really well. Let's look ahead now. Forecasts for the rest of 2025, starting with residential.
Cautiously optimistic, I'd say. We're likely looking at modest price appreciation for the year, maybe in the 2 to 5% range. and transaction volume should be noticeably higher than in 2024.
What's the thinking behind that?
Mortgage rates. That's a big factor. The expectation is rates might stabilize or even dip slightly later in 2025. Maybe low sixes or even high fives. If that happens, it could unlock more demand, especially for first-time buyers. So demand could strengthen in the second half of the year.
And supply. Will new construction keep up?
New homes in Tesoro Viejo and Riverstone will definitely add inventory, particularly in that $500 K+ range. Resale inventory might increase a little bit too, especially if prices nudge up and motivate some sellers who've been waiting. Months of inventory might hover around 4 or 5 months.
Still slightly favoring sellers then.
Probably, yeah. So home prices, forecast is a slow climb, maybe 3–4% appreciation for the year overall. That could put the median somewhere in the $430K to $450K range by year end.
Higher gains at the lower end still.
Likely. More muted appreciation at the high end. Don't really see prices declining unless there's some major economic shock.
And sales volume, a decent pickup.
Should be noticeable, probably a strong summer selling season in Q3. We could potentially see double-digit percentage growth in the number of sales compared to 2024.
Any shifts in who's buying?
First-time buyers will remain key, and their share might even grow if rates ease. Madera might also keep attracting relocatees, especially with remote work sticking around for many.
What are the risks to that outlook?
Main risks. Inflation flares back up, forcing the Fed to tighten again and push rates higher. Or, a broader recession leading to significant job losses could obviously soften demand. Don't see any major California policy changes specifically targeting Madera on the horizon for 2025, though.
Okay, so cautiously optimistic for residential. What about the commercial outlook for the rest of 25? Poised for growth.
Yeah, poised for growth, though probably measured growth. We should see more action on those new developments.
Groundbreakings, openings.
Exactly. Retail, office, especially medical, light industrial, and Riverstone, Tesoro Viejo along the highways. Maybe even the start of infrastructure work for Gunnar Ranch West. And the casino opening. Yeah. Expect an uptick in commercial construction activity.
And will demand keep pace with new supply?
Demand looks set to remain high. New retailers are eager for space. Industrial demand is robust. That reopened hospital will boost medical office demand. Occupancy should be very high overall.
Might vacancy tick up slightly if a lot of new space delivers at once?
It's possible, yeah. A temporary slight rise in vacancy if new space comes online quickly before it's fully leased up. But the underlying demand seems strong enough to absorb it reasonably well.
What about prices and rents commercially?
Expect commercial rents to hold firm, maybe increase modestly, especially for new retail space. Industrial rents might level off a bit after strong runs. Property values should remain solid due to that underlying demand and replacement costs.
Cap rates might edge up more.
Maybe slightly. But if property income is also rising, it can offset the impact on value. Good quality properties will still attract investor bids. Land values for commercial use are likely to keep trending upward.
Will we see more investors coming into Madera?
Could be. As larger markets get saturated or too expensive, investors might increasingly look to growing secondary markets, like Madera. Positive press about Madera County's growth could attract more regional players. Local stakeholders are actively trying to recruit businesses too. Office remains the potential weak spot, but it's a small part of Madera's market.
What economic factors will support this commercial growth?
Continued local economic growth, stable consumer spending, that potential tourism boost in the casino, the solid ag base, ongoing logistics demand, infrastructure improvements, they all help underpin the commercial market.
Potential headwinds.
Still the same concerns. High interest rates making deals harder, high construction costs, any broader macroeconomic uncertainty. But the baseline expectation is definitely for growth, even with some manageable growing pains.
So very low vacancy continues, new space gets absorbed, rents inch up, values stay solid. Maybe more deals happen as new inventory finally become available.
That's the likely scenario, yes. And any big economic development wins new companies relocating there would further boost Madera's commercial profile.
Okay, so bringing it all together, what's the bottom line here for you, the learner, looking at Madera in 2025?
Well, the picture emerging from early 2025 is one of pretty steady activity and, cautious optimism for the rest of the year, really on both sides, residential and commercial.
Yeah, it feels like the residential market is maybe offering a little more breathing room for buyers than in the past couple of crazy years.
Right, a bit more balance. While the commercial side seems like it's really gearing up for expansion with all that new development planned.
And what's really interesting, I think, is seeing that increased housing inventory meet up with demand that's still pretty strong. It suggests the market might be finding a more sustainable footing.
Yeah, finding its balance. And then on the commercial side, that anticipation of new spaces coming online could genuinely create some exciting opportunities for businesses looking to expand or move in, and for investors too.
This whole deep dive really highlights how dynamic even a local market like Madera is, doesn't it? Influenced by big economic trends, sure, but also really specific local stuff, like a hospital reopening or a new casino.
Absolutely. And it makes you think, right, how might these trends that we're seeing play out in Madera? How do they reflect or maybe differ from real estate markets that you're familiar with?
Huh.
That's a really interesting comparison to consider.
That's a great point. And for your further exploration, maybe digging into those specific industries driving commercial demand in Madera could be revealing.
Yeah, like agriculture, logistics,
Yeah.
healthcare, understanding how they're growing, what their specific needs are. That could give you even deeper insights into where Madera's economy and its real estate market might be headed long term.
Definitely food for thought. Well, thank you for joining us on this deep dive into Madera. We really hope this gave you some valuable knowledge, maybe sparked a few aha moments.
Hope it was useful.
Until our next exploration, keep learning.